So, Stephanie, we just heard from Jamie Dimon. He was on all the national networks down in D.C. talking about a bunch of different things. What were your thoughts on his comments?
Well, number one, the fact that he said that if you're going to invest anywhere in this world, it's going to be in the U.S., and he strongly believes that. Obviously, we're being held back by regulation, but the underlying fundamentals, he confirmed what we've been kind of gaining from other companies and other management teams, and that is that housing remains strong. Small, medium-sized businesses are recovering. Confidence is growing. The consumer is growing. And most importantly, lending is on the mend. And that's actually very supportive of the C&I loans that we saw last week from the industry trends of 15.5% year over year. So I think all the things that he said were very encouraging, and sounds like he had some confidence. So we'll see what they do on Friday in terms of their earnings report. But overall, I think I feel a little bit better about the quarter going into it on Friday.
Going into Friday, are you buying the stock going into the quarter? Or are you going to wait and see?
No, we were buying the stock in the low 30s when the London whale kind of hit. So it's hard for us to really pay up and ruin our cost basis. We're just going to sit tight. We still believe this is a great long-term story. The balance sheet is pristine. Expect capital allocation sometime in the first quarter. So I think that'll be a nice catalyst. And again, these loan growth data points, as well as the demand, is very important. And do think that is going to be the catalyst along with the housing recovery, along with the capital markets recovery. I think that these companies, the banks in general, their balance sheets are much stronger than they've ever been, and that's an important data point and something to really consider when you want to own these banks.
Okay, and on the housing side, you've been buying Key as well as, you've been trimming in SunTrust, I guess, and then Wells Fargo is your other top pick.
Right, yeah, no, I mean, and SunTrust is simply just profit taking. It's up 64% year to date, but that's a very good way of playing housing. Key, too, is a good way of playing housing, but in general, I just think that company has a very strong balance sheet, and they've got a restructuring program, so that's why we own that one. And it's also one of the cheapest at this point. And Wells Fargo, I do think that the hit that it took yesterday on the suit, I would be buying if it got into the low 30s. This is a great way to play housing.